Hi, everyone, and welcome back to another episode of Tuesday Tips. I'm your host, Marin Smith, and I'm the content manager here at Grow Schools. As usual, we're here on Tuesday, 10 a.m. Pacific, 1 p.m. Eastern, for 10 minutes discussing the biggest challenges facing school leaders. And this week, we're delighted to welcome Maddy, VP of Real Estate Acquisitions here at Grow Schools, for a discussion on strategic financing options when it comes to school facilities. And Maddy, I should start by saying these recommendations, it should be stated, are really for schools that already own their buildings, right? They may have been in them for some time and they might be considering refinancing.
Yep, spot on. Yep.
Okay. So that said, many schools might not recognize or have trouble recognizing, much like homeowners do, what is the right time to consider refinancing. Can you share what some indicators are that schools can look for when it comes to considering whether they should refinance?
Yeah, so I'd say there are really three main indicators to be tracking when thinking about refinancing. One is watching the interest rates and seeing if there are lower interest rates available. If rates have dropped since the school's initial loan was secured, then refinancing could potentially reduce the overall costs for the school in that sort of a situation. Also, if your school has had improved financial standing, strengthened its credit, that's another time where it may be worth looking at your options, see if you can get a better interest rate or extended repayment options. And then lastly, which is a lot of what we're seeing when we're working with schools on a daily basis, is if there's an upcoming balloon payment or cash flow concerns. So if the school has this looming payment due that they don't necessarily have the cash to pay off, or in general is just struggling with cash flow issues due to the debt obligations, then refinancing can help restructure your debt into some more manageable terms, which we'll talk about a little more how that could impact your day-to-day and what the financial benefits of that could be.
Yeah, those are great points, especially as I know a lot of school leaders are right amid budgeting season and kind of probably taking a hard look at some of these things, and especially with sort of the ongoing uncertainty as it relates to the education space in general.
Absolutely.
Just want to take a quick pause and welcome anyone who might be joining us a little bit after the hour. We're here tackling questions about refinancing your school building with Maddy Marlton. And you can catch these conversations with experts like Maddy every week. We're here on Tuesdays at 10 a.m. Pacific, 1 p.m. Eastern. So we'll get back to our chat with Maddy. My next question is sort of perfectly set up by your last comments, which are what are the financial benefits that schools can expect when they refinance their building, and how important can these be, or what kind of impact can that have on school growth?
Yeah, so going back to the interest rate component, if you've got a lower interest rate and can secure a lower interest rate than you've got previously, then schools have the opportunity to reduce their monthly debt service, which can free up that cash for other maybe educational programs or new hires or even facility improvements. So that's great. Could also, with the refinancing, potentially extend your loan terms. It can allow schools to reduce their monthly payments through extending out for a longer term. So that's another thing to consider. And then lastly, opportunity to access additional equity and specifically in relation to maybe some capital improvements. So if a school's facility has appreciated in value, then schools may be able to refinance, unlock some cash out, or wrap in the funding of renovations, new construction, or other things that your facility is lacking. So that's a lot of what our team is helping schools navigate through expansion or just delayed capital improvements. How can we rework structures so that they can access additional capital to make the facility really the best that it can be?
Yeah, seems like a smart move, tapping into that and just feeding it right back into improving the building. Makes total sense. if a school leader, if this piques their interest, they feel like it is the right time, they've thought through that kind of 3 pieces of criteria you gave us earlier, and they decide, okay, I need to approach a lender. It's time for me to kind of take action here. Are there specific preparations that they should make ahead of those conversations that'll make those make them feel empowered coming into those conversations?
Yeah, so financial readiness is going to be key. So taking a moment to review financials, creditworthiness is going to be under review by potential lenders that you're working with. And specifically, they'll be looking at debt service coverage ratios and cash flow stability. With that, I'd say it's important to gather the documents, have them all consolidated so that it's really easy when you're going through the conversations. You can just send over everything that these groups may need to evaluate the financial readiness. And that could look like financial statements. It's typically 3 years of audited financials, any current loan agreements that are in place so that those can be evaluated, projected budgets, cash flow statements. Lenders are going to dig into enrollment trends and any fundraising efforts or reports. And then if you do have a strategic plan outlining the future for growth and sustainability, that's always something that's great to include and just helps contribute to the sense of stability and overall financial health. From there, schools should engage multiple different options, see what's out there in the market, whether that's looking at loan options with a bank, seeing if the school is viable to explore their bond options, or work with specialized lenders like Grow Schools who can provide a different sort of financing structure, and then be sure to compare rates and loan terms and flexibility, keeping your priorities in mind, whether that is a reduced annual payment or if it's accessing additional funds to improve your facility, what the main goal there is. We always recommend, working with a financial advisor if that's available, who can help navigate that process. They really specialize in helping schools with that, but definitely an important step to explore what's out there, see what you're comfortable with, and what's going to unlock the most value for you.
Yeah. And again, such timely advice as we're kind of right amid budgeting season. If school leaders are already, have their hands really deep into these different documents that you're talking about, might be a good moment after those are all sort of vetted and completed to take those steps and reach out and try to get ahead of it. Can you share, in light of all that you've shared so far, a success story of a school that you've seen do this in a way that worked for them and that really led to great outcomes, either for their programs or their building or for students?
Yeah, so recently we had the opportunity to partner with a school in California, and their situation was that they owned their property. Actually, in this case, it was a couple properties that their school operated across. They had an upcoming loan maturity with a payment that was due, and they weren't necessarily in a position to be able to pay that off. So they started looking at their options. One of their priorities was to unlock some funds to complete some tenant improvements to upgrade their campuses. There were some grade swaps going on across buildings, so that meant they needed to change up the classrooms to offer a little bit something different for the programs that they had. And so ultimately, we were able to structure something where it was a sale leaseback. They sold their facility, Grow Schools, in partnership with Wonderful Foundations. So now the school is in a long-term lease. They got enough capital out of this transaction to pay off their outstanding loan, a little excess to stabilize operations. And then in addition, they were able to wrap in some improvements that our team was also able to help facilitate the management of that, to take that off of their plate, as far as, managing what they needed to do on a day-to-day basis to get those projects done. So that was a great success story for a school that was up against refinancing and really trying to figure out what their options were, and ultimately what their priorities were to complete those tenant improvements and make sure that they were getting some cash value out of the sale.
Yeah, and it speaks to one of your earlier points about being careful about who you're approaching and working with, because it sounds like, by choosing a good partner who understands the charter landscape and the needs of schools, they were able to not only refinance, but get some wraparound support in other areas, like you said, getting help managing some tenant improvements or whatever they wanted to do with some of that capital. So that's an amazing outcome.
Yes.
Maddy, I want to thank you for all your insights on this important topic. And as I've said several times, I think it's super timely, especially as we're amid budgeting season. For those of you watching, you can hear more from Maddy in the live event called Financial Survival Kit for Schools. You can head over to growschools.com and check out that longer form video. And thanks again to Maddy for everyone and to everyone who joined us today. And we will see y'all next week. Thanks, Maddy.
Bye.